Welcome to Channel 17, the Town of Colonie Government Channel.
Hi, I'm Supervisor Paula Mahan, and welcome to Colonie Connect. Over the past several weeks, I've been visiting various locations to provide an overview of our financial situation in the town. And today I'd like to introduce you to our Comptroller, Craig Blair, who is going to provide an overview on our program today, Colonie Connect. A snapshot of our town provides us with a little background of our town as it is today. It was founded in 1895. We have approximately 80,000 residents. We cover over 56 square miles, and we're rated the 6th safest community in 2007. The median family income is $62,649. Our location is one of our best assets. We're centrally located between the 4 major cities of New York's Tech Valley. We have close proximity to the New York State Capitol. I-87 runs through the middle of the town, which provides excellent transportation, and we're the home of the Albany International Airport. Our town workforce is composed of approximately 650 workers to perform a wide range of services that benefit town residents. Our employees are grouped according to various bargaining units, and they're represented by various union affiliates. They deliver a variety of exceptional services, such as emergency services, plowing, road maintenance. We have an excellent Parks and Recreation department. Our golf course is doing extremely well this year. We've exceeded revenue this year over the past years, which we're very proud of. We have our Latham Water Department, our town landfill, Pure Waters, and of course, our William K. Sanford Library. The purpose of our strategic plan is to provide a 10-year program which will eliminate the budget deficit in each of the town's funds. We'd like to restore surpluses as advised by the State Comptroller and also our various financial advisors, including Moody's Investor Services. We want to exceed residents' expectations in service delivery and remain one of the region's most desirable locations to do business. As an administration, we've identified various priorities. We want to restore fiscal stability to the town's finances. We'd like to elevate our credit rating, which is currently Baa1 with a negative outlook. It was dropped 2 consecutive times by Moody's in the year 2006. It's very important to get that credit rating raised for our town so that we can work with our creditors to improve our interest rates and be able to meet our financial needs to the best of our ability. We need to reestablish the public's confidence in town government. And our goal is to keep taxes low while exceeding residents' expectations. The current situation is described as an estimated deficit. We worked with the New York State Comptroller's Office and various town financial advisors, the town comptroller as well, and also we worked with outside auditors and our transition team, which was composed of various people that had expertise in finances. They determined the estimated deficit on December 31st, 2006 was over $14 million. The Office of State Comptroller projections through the year June 2007 showed that the deficit had climbed to $18.1 million. We looked at the causes of the deficits, and we received the information from the Comptroller's report, the State Comptroller's report, as well as all of the other advisors, financial advising groups that we worked with. And they identified the following causes. There was a lack of effective town board oversight. Since 2002, revenues have been overstated while expenses have been understated, resulting in the estimated total town deficit of $18.1 million as of June 2007. In an effort to balance the town budget, surplus funds and enterprise funds, such as the landfill, Latham Water, Pure Waters, these funds were used to supplement the general fund, which are our daily operating expenses. And also, they've identified that the board failed to establish adequate internal controls regarding cash disbursements. Other factors included 6 consecutive years of operating deficits, an inability to maintain positive cash flow for operations. This year, we're operating with a cash flow problem of about $10 million. And Craig, maybe you could add a little to that as to how we're managing with our cash flow problem.
Basically, what we normally do now is periodically, every quarter, 3 or 4 months, we borrow, go out and do a revenue anticipation note based on sales tax that would be coming in for revenue that we will receive. And those go out on the market, and then we get whatever rate it is. And there's added cost to that. There's interest, and then there's also administrative fees to manage that. But currently, we've done 3 so far this year just to manage our cash flow situation.
Okay. And about how much is each RAN?
It depends. We take $5 million RANs, and depending on the rate that you get, it can run anywhere from $40,000 to $50,000 in interest and administrative fees.
Okay. And I know when we visited Moody's to work with them on keeping our rate stable at this point so it didn't lower again, the RANs, that was one of the things that they had asked that we could stop depending on them
Yes.
to operate with.
Yep.
So that was one of the things that we've been looking into quite a bit. A few other factors include legal and interest costs for the issuance of cash flow borrowing, which Craig just went over, as well as a lack of an implementation of a comprehensive plan to address the deteriorating financial conditions. And Craig, if you could go over this revenue and expenditures graph for us, please.
Absolutely. This is based on 2003, 2004, 2005, and 2006 audited financial statements. The last bar graph is 2007, which is unaudited but estimated. And as you can see, the bluish color represents the revenues, and the maroon or reddish color represents expenditures for each one of those years. In 2003, 4, and 5, you can see where the revenues were far below the expenditures consistently. And then in 2006, there was a reaction to those previous years, and the revenues exceeded the expenditures by a small margin. And then in 2007, again, it went back to not as high as the previous years, but the revenues are falling short of the expenditures.
Okay, now looking at the graph, was it approximately around 2006 when the highway tax was implemented?
Yes, I believe that was the time frame.
Okay, so so basically we have our town tax and our highway tax, and those combined basically are our town taxes. And
correct.
We can see, looking at the graph, where it started, the revenues were catching up, doing better, but then again, the expenses were greater in 2007. And this is where, this is one of our biggest challenges, and that is creating a structurally balanced budget for 2009 so that the revenues that we're bringing in will meet the expenses. So we basically have to work on a budget that is within the amount of money that we actually take in and can handle.
Yes, it's very similar to your home. If you bring in so much in salary, then you try to live within those means.
Okay. Thank you.
This is a breakdown of the deficits by fund, and the general fund currently at the end of 2006 has a $12,836,921 deficit. The highway fund has a surplus of a little over $5 million right now, which I'll talk about in a few minutes. Landfill is around $7.5 million deficit, and the library fund has about $218,000, and Maplewood Refuse has about a $1,700 deficit. Now, as I said, I'll get back to the highway fund. That is generated, actually all those funds added together come up to about $15.5 million, which is what the audited financial statements state for the deficit for 2006. There's approximately $6.6 million in sales tax money that's used in the highway fund. What happens is when you do a highway tax, in order to offset the tax, whatever sales tax you take in has to go dollar for dollar against that tax until it's zeroed out, and then you can start using the sales tax. Unfortunately, that wasn't done. So that money is now in the highway, been transferred into the highway fund as we, so to speak. And that will be transferred out at some point in time when we get rid of the highway tax and brought back into the general fund. Our idea for 2009 is to do away with the highway tax so that we don't have this issue with the sales tax. In essence, that'll bring the general fund deficit down to around 7.8. However, the highway fund will now be zero, so that surplus isn't going to offset any of the other deficits. So you'll still end up with a $15.5 million.
The same number.
Right. The bottom line will stay the same.
So it's more of an accounting mechanism, and in essence, the town tax and the highway tax, whether it's on one line or two lines, it all goes into the town tax. But I know you have mentioned that the New York State Comptroller's Office and the auditors have stated that that needed to be corrected the way it's presented on the bill.
Yep.
Okay, so we will work on that as well. We've taken, as we look at our financial plan, we've added several short-term objectives as well as long-term objectives leading to our goal, the outcome that we're looking for. And one of the short-term actions that we had proposed was the one-time deficit correction tax. We were able to look at all of the residents in the town, and we were able to get 90% of our residents under $250, with the average resident of $156 per parcel. And then we also had an average of $550 per commercial parcel. The goal was to generate about $7 million to pay down the general fund deficit and end our dependence on RANs. And we did, many of you may have heard that we tried to have this implemented for October, which would require legislation because it's earlier than the normal tax season. We weren't able to get that legislation at this point. So it is just one of those other options that's on the board, possibly for January, but we are doing everything else that we can to see what other options we might have between now and that time that could help us to raise really that chunk of $7 million that we desperately need here. We did a little bit of a sample here of what you could expect to pay if your house is assessed at $75,000. Again, that's assessed value with exemptions taken out, and that's not what your house would be sold for on the market, but that would be an assessed value. The one-time deficit correction fee would be about $95. And you can see, looking at the chart, that $200,000 assessed value would be about $254. And again, this was meant to be a one-time deficit corrective action. And if this does go through, it will be stated as a one-time so that it would not be repeated as in future years. Another short-term action is we looked at all types of properties that we might be able to liquidate. We were able to complete the sale of Heritage Park. which is $2.7 million. That's going to help us with the deficit. And we are in the process of closing on that agreement. So we're anxiously awaiting the $2.7 million. The Newtonville Post Office parcel, there is a piece of land that's behind the Newtonville Post Office, and we own that land, and we do have an option if we'd like to sell that. Obviously, the post office is not for sale. The Stony Creek Reservoir, which is located in the Clifton Park area, we have a reservoir there that serves as an emergency backup water service for us, which throughout the years may have only been used a few times, but it's nice to have that as an emergency backup. But there is a large portion of land that surrounds it, many acres that surround the Stony Creek Reservoir. So that's another option for the sale of the land with the option of maintaining water rights for the future. And the Colonie Community Center is something that was up for sale prior to when we took office in January. The previous administration was looking into the sale of the community center. There were some groups that were interested at that time. We certainly would not want to make any type of sale with the community center until we were sure that we had plans in place for the programs that are there for our town residents, so that all of the children that attend any of these programs, we'd have an alternate plan in place. We have a lot of other short-term objectives. We have earned $1.5 million additional revenue at the landfill. We had 30,000 tons of excess capacity that we sold. And also the expanded sale of carbon credits, that's from our methane gas system at the landfill. We're asking our departments to work towards cutting back 20% in their 2009 budgets, and to date, many of the department heads in 2008 have made some major changes that have really helped us to conserve a lot of money. We will implement legal enterprise fund chargebacks from, say, Latham Water Department, the landfill, Pure Waters, for services such that come from the general fund, such as attorney fees, your comptroller fees, things like that. We've reduced our capital budget expenditures from $10 million to $5 million. That's a 50% reduction. Vacancies, we are keeping them, unfilled unless it's necessary. Finding other ways. If they have to be filled, we're looking at, is it possibly something that's only used part of the year? Should it be part-time? But when they can be left vacant, say, for example, through attrition, someone retires or someone moves to another position, that's an opportunity to save money. We put a freeze on all non-essential spending. We've eliminated automobile stipends for department heads, which adds about $3,000 or $4,000 to their salaries. The Latham Water District, I believe we're looking at billing quarterly.
The 10 largest users of the water on a quarterly basis. It won't generate more income, but it'll give us a better cash flow situation.
Okay. As well as looking into EMS billing write-offs and improving the billing process. Reducing seasonal hiring, and evaluating existing rental service agreements. One example of that, again, is our Newtonville Post Office. Our town attorney had been working with the post office because we discovered that the rent agreement went back to 1973, and they were paying $140 in rent. In today's market, that was a little low. So they worked with the U.S. Postal Service, and they were, very, very good with everything and brought everything up to date. And currently, the rent is about $1,400 a month. So it's those types of agreements that we're looking over. And when we talked also about the freezing non-essential spending and the vacancies and things, to date, we've just updated our cost savings plan. And we currently have conserved since January 1.6 million, which I think is outstanding. And I thank you for all the hard work that you've been
the
doing.
department heads did it too.
Yes, they did, and they really came up with some great creative ideas. So kudos to them as well. We have some long-term objectives, which include evaluating the advantage of consolidating and restructuring our town departments. In fact, we just did that with our library. Robert Jakeway, our longtime library director, has retired, and we restructured with his assistants and assistants from the library staff. And we were able to actually move the staff around so we have a better distribution of staff, but by restructuring, we ended up saving about $30,000. So that's a good example of consolidating and restructuring. At this point, all employees are participating with health care contributions. We settled about 6 or 7 contracts, and that was something that was very important to us, to have it consistent and everyone participating. The energy audit is still going on for 2008, and we are anxiously awaiting the findings. It should be here soon, and I'm hearing that they've got some good news for us. We're establishing effective internal controls for cash disbursements. Again, looking at town resources to generate revenue, such as Stony Creek Reservoir. We now have a farmer's market at the crossings on Saturday mornings, which will that will continue into, I believe it's September 27th.
I think.
And any of the vendor fees, any revenue that we collect, will go back into the crossings for any type of repairs that are needed at the crossings. Generating more property and sales tax with an aggressive economic development strategy, which we're working closely with our Planning and Economic Development Director and the whole department. And what we're doing is looking at areas of the town that really could use redevelopment. They've been abandoned for quite a while, trying to enhance the environment while, bringing in smart growth. And we will also be implementing what's called town designated engineers, which will be working collaboratively with our Planning and Engineering Department, our DPW department, and it is going to enhance our planning process. And it's really a great situation. A lot of municipalities do use this process, and what it does is it provides assistance for our staff so that we can meet the needs of both our smaller applicants and larger applicants for development. And the town designated engineers will work collaboratively with our people, our staff, and they will be paid by the developers. So it's an efficient system that seems to be working well in many of our surrounding municipalities, so we'll be going in that direction. As well as we talked about service consolidation. Ultimately, the outcome that we're looking for is to consistently create a structurally balanced budget each year. And what we mean by that, and correct me if I'm wrong, Craig, we need to have our expenditures in line with our revenues, just as we would with a checkbook in our own household.
Exactly. So, the money coming in should match the money going out.
Right.
And hopefully, the ultimate goal for many municipalities and everybody else is they have a little bit more revenue than do expenses.
Yes, and that comes into play with building the surplus.
Yes.
Yes. At one time, I think it was in 2002, we had a $12.5 million surplus.
That's correct.
And so we went downhill pretty fast here. So now we've got to get back up there and build a surplus and pay off our deficit. We would like to effectively eliminate the cumulative deficits by implementing a long-term plan that ensures stability in our population, economy, and a continuation of commercial and residential development. And this is an overview of our financial plan for the town. Craig, I thank you very much for participating
Thank you for
today.
inviting me.
And also all of the sessions as we visited various areas of the town. We got a lot of good feedback from the
Yes, we did.
residents.
We did.
And I think we have one left down in Stamford Heights, so looking forward to that. So thank you again. I really appreciate
Thank you.
it. And thank you for joining us on Colonie Connect.